All right, good afternoon, everyone. Hope you're having a fantastic day. Let's go ahead and make sure you all can hear me. If you would please type the number one in the chat box so that I know that you can, I would truly appreciate it. Afternoon, Brenda. Good morning, Helen. Thanks, Andrew. Hey, Jim. Afternoon. A lot of ones in there. Mr. Ed, how you doing? Hey, Patty. Bonnie, guys, sorry, they're going really fast. Hard to catch all of them. All right, all right. Yep, camera comes next. We're just making sure we got the text chat going first. That my mic is working okay. There we go. All right. I can see me. Well, hope you're having a good day. I truly do. As we get started, keep in mind that everything we look at is for education. Nothing is meant to be advice or recommendations. If you find something here that you like, anything, make sure it fits your own personal risk profile and risk tolerance. All right. So, we've got today's agenda. We're going to go through our follow us page. We're going to go to today's trades, economic reports, market review, upcoming future trainings, weekly trading topic, and then your stocks in review. Basically, what stocks you want to look at. That's really what that section is to me. That's probably one of the most important ones, that and the weekly topic, which is why they're at the very end. So we can spend the last times that we have on those. Here's our follow us page, guys. You can go to the links that are here. You can go to to Twitter. You can go to YouTube. There's our handle, wealthbuildershq.com is YouTube, right? Obviously our website, but you can't go to the trading post, right? You probably can, but you probably can. I shouldn't say that. But Andrew, can you drop that link in there if you would, please? You might be able to go to that link. Let's see. That's where it should. You see this document is clickable. So if we were doing Power Hour, yeah. So you could go right here to the trading. Yeah, but it's got some other stuff in there. But if you go ahead and Andrew will drop that in, you can register for the trading post. We send out an email every day, first thing in the morning before the market opens, usually by 8:30 a.m. Eastern, of what we're looking at for the day, right? Really hot topics right now. Yeah, that's the same link that I came up with. Thanks, Andrew. Of what's happening right now. We've got some different categories that we look at each of the 5 trading days. As long as the market's open, we're sending out an email. All right. So from here, today's trades. What trades did you all do? Drop those trades in. Funded or non-funded, I don't care. Right? Win, lose, or draw doesn't matter. What matters is that you're doing the trades. That's all I care about at this point. I'm going to share one with you from today. Was it the best idea? No. Is it too late? Yeah, I already did it. Right? We're hoping for the best at this point. So let's see. Jeff said 4 trades on Micro NQ, which is the NASDAQ futures. Average 4 seconds. 4 seconds. Done from the open so at 9:30 to 2 minutes after 9:32. $116 profits, 5 contracts each. Fantastic. Great job. Amelia IWM, 35% rate of return in 5 minutes. I'm sorry, 8 minutes. Nice. Brenda, 429 on SPY. Very nice. And that was from the 5th, which is Friday, right? Yeah. Today is an interesting day, and we'll get into it when we look at SPY. But here I want to look at Broadcom. All right. So if you are not, yep, congrats all, Patty said, and some others. So guys, good job. Very much appreciated. Norman said I trade on one trade SPI up 120% in 50 minutes. Great job, Norman. Wonderful. So this falls heavily into the category of potential high volatility switchback trade. What does that mean? Right. So we had basically the technique I teach there is a switchback trade is when we close like we did right here. We close near a fib line. It gives us an opportunity. If it moves up, retests and bounces, we can take the bullish entry. If it fails, retests and drop, we can take the bearish entry. Right. So unless it gaps away, there's always potential for a trade. Well, then we started getting all these gap aways in this one period of time a few months back. And I developed this high volatility trade, which we used for switchback, but can be used for any setup. You get a gap away. Can you get a quick move back to a key level and a bounce? So we gapped up here. And if we look at a 5-minute candle on Broadcom, we gapped here, right? We ran all the way up. We fell back. We pulled back finally, and we bounced from that pullback. Okay. So here's the problem. We moved all the way to resistance For whatever reason, I had in my head that that was not something that had actually happened. In my head, that was not something I ever saw as a concern that had already hit resistance and has now failed and gone all the way back from resistance all the way to support. And now, after it's done it, let's go do it again. Well, I did. I took the trade on the bounce. What did we do? 390s, 390s at 20 and jingle for them. Contracts are still open because we haven't gone back up. We've probably less than it was worth. I haven't checked it in the last hour and a half or so. Hour. So, but the stock price has gone back up from where it was, but we'd already hit resistance. So was it the right trade? Absolutely not. Did I do it? Yes. Did I speak it out loud? Yes. But I wasn't thinking about did we already hit resistance? Right. And normally I don't allow that to enter in, meaning I don't take trades like that. For some reason this morning, just completely spaced, absolutely spaced on the trade, right? The way that it moved. So right now I've got one that I've got to contend with. I'm holding on. I'm not ready to get out just yet. Got a couple of contracts. So overall, I'm feeling good. All right. In other words, I'm feeling good. And overall, I'm not concerned. If it goes against me, it's what it does. I got interviewed on a podcast on Friday, and I was talking with the gentleman that did the interview of me, and he was saying from your bio, I could see that you had a lot of limiting beliefs growing up, and so mindset seems like it's been a very important thing to you. Let's talk about it. And we got talking about funded versus non-funded trading. And when I talked about my process of teaching someone to start with non-funded and how to ultimately move into funded, he goes, "But Rob, you do know, just like I do," he said, "that funded trading is totally different than non-funded." And I said, "You're right, it absolutely is." I said, "What is the biggest difference there? You don't fully trust your system, right? For most people, you don't fully trust your system. When I did 300 non-funded trades in a 30 period day, I trusted my system. Did I know trades were going to go against me? Yeah. About 30% of the trades were going to go against me. Absolutely unequivocally, I knew it. So over the next 10 trades that I did, if I did 2 trades a day, over the next week, three of those trades were going to go against me. It wasn't that I lost $10 on lunch today. No, it cost you $10 on lunch. I knew that. I know if I go to the store every day, I'm going to spend $10 or whatever you spend on lunch, right? It's no different. You know that your system is going to have 3 out of 10 trades go against you. The key is, can I get a $2 reward and a $1 risk? If I can do that or better, now I'm gravy, because I only have to win on 4 out of 10 trades. I don't need a 60 or 70% win rate. I don't. Right? But I know they're going to go against me. As long as you can approach it that way and you feel confident and you know going in, hey, there's a high probability that this is going to go against me. How high? 3 out of 10 that it's going to go against me. Again, it's a mindset function that you've got to get right. Again, up here to get it right in the wallet, right? And you've got to trust your system. And if you've done a half a dozen trades in non-funded and now you've flipped over to funded trading, I'm not telling you not to do that. That's your call. For me, if we were working one-on-one, I would tell you not to do that. If I'm working with you as a mentor and we're talking about do this, do that one-on-one, it would not be to jump into from non-funded to funded after just a handful of trades. I need to know what your headspace is. Where are you at up here? Right? Are you sleeping at night if you're holding overnight? Are you freaking out? Do you check the phone in the middle of the night when you wake up on one of those extended, excuse me, wake ups there that you just can't sleep because you're stressing out over what's going on with your trades? All right? There's other components to it, but bottom lining it is you've got to trust your system. And a handful of trades doesn't give you trust. What happens if you go and do non-funded trading? You start with your non-funded trading. You're doing awesome. Your system wins 6 out of 10 times. The very first funded trade you do goes against you. The second funded trade you do goes against you. Your head, you're freaking out that this is your new path. You got lucky on the paper trades. Everything's going to go against you. The third trade starts wiggling around. You're freaking out. You're exiting soon, sooner than you should have. You didn't let your trade run out and play out. You don't trust the system yet, right? Trusting the system is put the trade on, leave. It's all set up. Walk away. You're done. You're done. All right. That trust is what you cannot get any other way than actually hitting the enter button and doing it over and over and over again. All right. So we'll see what happens with Broadcom. We'll keep our eye on it. I wanted to talk a bit about Netflix. There's been a lot of questions I've gotten. I mean, a lot of questions. Should we be buying Netflix at this time? Netflix, man, I haven't looked at Netflix, Rob. Wow, it's at $96 from 1,000. What in the world? It did a split, 10 for 1, 10 for 1 split. Okay. Phenomenal split, very short lived, right? They announced it, boom, within 2 weeks or so, it was split. It was approved and split and done. So if you look at where the split was, where the actual split took place, and that's the S on the bottom of the screen here. That was on 11/17, right? So that's right here. Okay. We had a quick little pop and we have failed. So right at that point, 110, we're down to 95, call it. Right? That's $15 drop on $115, $110 stop. So 10, 12, 8%, whatever it is, 8 to 12%, whatever the number is, drop from where it was. This is not unheard of with a stock split. Yes, we've been higher. We were up near that 132, 3 level, whatever it was. And that is post split. Watch on Omega charts. See this here where that S is? If I hit the letter, activate the chart, meaning click on the screen, hit the letter U for umbrella or unsplit. Now this chart becomes a mess, right? But we're up here at over $1,100 was our price. And then that's where our 10 for 1, sorry, 10 for 1 split took place. Hit the U again, it fixes it. Now it's because this right here is a technical analysis nightmare. How do I technically measure moving averages, MACD, stochastics, RSI? You can't. So you go back and you work in reverse and you fix all your pricing, your closing pricing, all pricing, based on it's done the split forever. And it goes back and fixes those numbers. But the letter U allows you to go back and see it. So I am a fan of Netflix. I think they have got a unique model. Others are trying to copy it. It is not working the same. You're seeing so many companies wanting to sell off their premium properties that they own now with their HBO or some Disney's got a bunch of them. With some of these products that they're just not working the way they thought. Oh, we're going to rule the world with Paramount Plus. You already have Paramount. Now you got Paramount Plus. I'm not saying they're not. Paramount Plus has a different their USP, unique selling proposition, right? Their USP. Their unique selling proposition is it's like $6 a month for Paramount Plus. And if there are shows you like on there, for me, Tulsa King, Landman, I love stuff like that. And then you get all the replays of everything that they run on, I don't know if they're on CBS or NBC or whatever it is, but you get all the replays of the other shows in there as well, right? $6, very inexpensive comparative to Netflix. It's half, less than half than in Netflix, right? But I think Netflix has a unique selling proposition as well, right? USP is what it's called in business, all right? What makes you different than everybody else? What makes it where you are not fishing in that you are fishing in a blue ocean, not in a red ocean? A red ocean is where all the cutthroats are out for blood, right? The sharks are in the water. Everybody's undercutting. How do you win? You get the lowest price, right? You can never compete on price and win. It doesn't work, in my opinion. You want that blue ocean. They were in that blue ocean. They're the 8 million pound gorilla in the industry. So I like them. So long term, I'd like to own some of their shares. So I want to talk about what I'm looking for. A pull down to the 92.5 would be okay. I wouldn't be upset by it with the bounce there. I might choose to buy some. But I'm looking for the move down to 82. That's where I'd like to see it go down to. And some of you may have seen this happen before, where, and I say you've seen it happen to you, right? You go ahead and you enter in that stock. It comes down to 82 and it bounces, and you take that stock and you buy it right there, right as it bounces off of that 82. And you're all over it, and life is good. And then what happens? Then the stock decides it's going to fail yet again, and it's going to break through. Right now, I've got some historical support lines there. So you've got 82. I've got a line here at about 77, 76.80, it looks like. Yeah, we'll call it 77, rounding it up, okay? So if it hits my 82, bounces, and I decide to enter into a trade, when I buy stocks like this, like a Netflix or a Google or an Amazon, after they do their split, Tesla, I normally am buying them near where the announcement was. When I say near, I'm not waiting 6 months, right? I'm trying to capture some momentum there. But there's a very basic concept when it comes to trading the market. And if you are walking in New York City, it's probably the best thing you could ever do. Okay. If you're walking down the street and you look up and you see a piano falling from the sky, they're lifting a piano up and the rope dropped. Do not get there and prop yourself up and try to catch it. Okay, get the heck out of the way, pick the pieces up later. Right? It's no different with a stock. Don't catch a falling piano, don't catch a falling knife, whatever phraseology you want to use. I'm gonna walk away. So let's say it did bounce and I took the trade and then it broke. Right? Well, now what? Oh, I did the trade. Oh my God, oh my God. No, I'm gonna wait for it to get down to 77. And if I get a bounce off of 77, that's entry number two. I don't enter my entire position personally in one shot for my long positions like this. I normally look for five as my ideal. So I'll split my entry up. So if I wanted 500 shares, just to make a very easy number, my first entry would be 100 shares, right? I may never get any more than that. It may bounce and take off and I don't get to add to my position. So be it. Okay. Yeah, but Rob, you bought it at 82. Now it's at 78 and you're buying it again there. That's right. And then it bounces on to 78. You enter the trade and then it immediately turns around and it fails and it drops again. Right? So now we've got a line down here, which takes us to about 68. I'll look at another bounce off of that 68. If it bounces off 68 and moves back up, there's a place to add to the position. Guys, this is not a short-term buy and sell. This is a long-term buy and hold. Warren Buffett methodology. If you're going to buy a stock for a day, plan on holding it for 10 years. That's the stocks that I have. Can you do some things along the way with them, like write covered calls? Yes. There's so much that you could do along the way. Right now, I just want to go ahead and find a place of strength, catch a bounce, and potentially take an entry. Ideally, if it bounces from there and never goes back, I'll be okay if if I wanted 500 shares and I only bought 100 and never pulled back. There's another strategy later if it's going up. Starts climbing up, gets bullish, pulls back to a support and bounces. There's where you add to your position. So you could buy lower when it bounces, or if it breaks out, pulls back and bounces, you buy higher. Runs up again, pulls back and bounces, you buy again. Runs up again, pulls back and bounces, you buy again. Right? It's dollar cost averaging. I am not guessing that the day that I decide to get in the market is the best day. Is the best day long term. I picked the perfect timing. Guys, once in my life, in my 27 plus years of trading, have I bought at the low and sold at the high. And it was pure dumb luck. Had nothing to do with skill. Nothing at all. None. Most traders never do it. I've done it once. What's that, Steve? Paramount wants to buy WBD for $108 billion. There you go. There you go. So, guys, this is what I'm looking at for Netflix. I just wanted to share a little bit with you with that. Actually, I think I'll leave those arrows on there. I might talk about that and pop a little bit today as well. But I like Netflix. As a company, I like them. I think there's potential opportunity there. You just have to decide if you're looking long term, what is it you're looking to do? I don't know. Right? That's just my strategy. Five entries is what I'm willing to go up to a maximum of. Now, if I thought I was going to bounce off of that next level and not go back, I might buy two of them right there and only do four. It all depends what the pattern looks like, what the news around it is, and so forth. Okay. All right. Did I miss anything in the comments there? Excuse me. Okay, got it. All right, so let's go back into our presentation. Economic reports. Dun, 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 dun. This is the one I've been waiting for. Forex Factory. So when we look at what's going on from an economic report standpoint, right? ADP weekly employment change. I don't know why that's tentative because it's ADP. It's not the government, so I don't know why it's tentative. It's usually not. But let's see. JOLTS September data. We don't have anything. So it's 10 o'clock here. So we'll say it was 10 o'clock, right? So this right here, we've got a 10 a.m. report. It's a 1. 10 a.m. and it's red. This automatically becomes a 1. If it was just orange and it wasn't the same report, right? They're going to be two. This is September. This is probably for a different month, different time frame. But since they're both out at the same time, they just become a 1. Very important. The market's open. 8:30 tomorrow. That's Tuesday. 8:30 on Wednesday. We've got unemployment cost. That's a 2. It's red, but it's pre-market. It's 8:30. Okay. 2 o'clock is Fed fund rate, FOMC projections, FOMC statement, and then FOMC press conference. This is OMG, right? What do you mean? Guys, there is no more important report than this right now. If this was a year ago, oh, is the Fed going to cut rates? Hell no. What are we even bothering looking at it? Don't worry about it. We didn't see much lighter volume. They talked a little bit about what was going on, what we saw coming up in the future. But there's a lot of dissension going on right now of disagreeing. Should we raise? Should we keep? Should we, drop a lot, drop a little? There's a lot of talk about that right now. This is part of our topic today for our education topic for the week. So I'm gonna spend a little bit of time in there, not really go into it here, but you're gonna see lighter volume in general on Wednesday all day, right up until that 2 o'clock, and then you'll see some spike in volume. You'll see a lull until Powell speaks at 2:30, and then volume could spike and drop based on the questions being asked and how Powell chooses to answer them. Okay. Yeah, Brenda said higher rates, lower rates, higher inflation. Yep, that's the possibility. Bonnie said, so you're adding to your position on Netflix. I don't have Netflix right now, Bonnie. I don't own it. So this is my opportunity to buy it first time in. Right? I like that they split. I do think, okay, let me back up. I believed that Google and Amazon were too big after the split, that they never would take off again. They would do okay. I did not expect Amazon and Google to be some of my biggest profits sitting in my accounts of stocks that I bought. Of course, all non-funded, right? We don't talk funded. Two of my biggest profits sitting out there on those two, right? And it all came right after the split. I mean, my cousin calls me the other day on his way to work and goes, dude, I just got to tell you, I don't look at my accounts very much. He said, and I looked at the Amazon stock that you told me to buy. He said, I'm up 88% right now on Amazon. I said, I know. I said, how are you feeling about it? He said, I feel like crap. Why? Now the person I'm talking to is my cousin's husband. As far as I'm concerned, he's my cousin. He and I are like, we grew up as kids, right? That's how close we are. And I said, why? He goes, because your cousin wouldn't let me buy what I wanted to. He said, I was going to buy more than double that. And she said, oh, maybe you better just put it under the mattress and don't invest it and don't do anything with it. He said, I'm happy with where it is, but, I wanted to buy more. So the opportunity is there. No question. All right. So Jim said, FYI. Yep. I appreciate that, Jim. I'm going to go over that because I've got the site ready to go. So if the rates get cut, might it goose a Santa Claus rally? It's not the rate. We know, Brenda, it is, Bonnie, sorry. It is going to be almost impossible that there's not a rate cut of a quarter point this in December. It's almost going to be impossible unless something crazy happens between now and Wednesday. Almost impossible. The market is already banking on the quarter point drop. It's not the drop or the raise that makes the difference. It's the forward-looking statement. This is what we see coming up next. This is what's happening soon. This is what we think is going to go on in the January meeting. That is where the concern and or watchful eye has to come in off of that. So it's not now, could what Powell says mess up the Santa Claus rally? Absolutely. Could it stimulate it? Absolutely. I don't know what that's going to be because I don't know the numbers he's going to spew out there to back up the decision of the Fed. And keep in mind, he doesn't make that ultimate decision. The Fed members vote, right? So he doesn't make the ultimate decision, but he's got a big say in it, right? And a lot of sway because of who he is. But who he is a Fed chairman that's on his way out. He won't get a second term. There's no way. Um, there's no way. I don't believe for a second he'll get a second term. If he does, I'll be absolutely shocked if he gets term number two. Okay. So we've got to watch out for that. Unemployment on Thursday, it's a 2. It's red. It's before the market opens. If you're trading futures, this is a tremendous report. Major trading time for futures is right at 8:30. Right? I mean, when I was trading futures hard, that's where I'd be looking for is right there. There, and then I could walk away for most of the day. I'd go to the 9:30 open again in the market, the U.S. markets, Eastern, of course, and then maybe the 8 o'clock in the evening for the Australian and some of the Asian markets to be open. Other than that, it was 8:30 was a major time frame because we wanted the announcements. Today, no announcements, at least nothing that's red. Now that's here. If I go ahead and refilter this and say I'll take everything yellow and I will take everything for all countries, and now I go and look at today, right? Nope. Okay, 12 p.m. This one's already come out, right? These are all evening time, so I don't care about these. Right? They don't matter. Right? So I had a 12 o'clock, I got a 1:30. These are all very early. 4:30 a.m., 3 a.m., and so forth. Right? So there's still opportunity out there. 9:15, right? For tomorrow's. You can see all the other reports that are there. As a futures trader, you want to know globally, everyone that's coming out with their announcements. For sure. All right, let's go back in. Market review. All right, I want to talk about the S&P 500, which I am so excited to talk about. So excited to talk about. All right. We reverted back to a previous fib since this one had been violated, which was these fib lines here had been violated in there. We broke out, and where are we? This right here was last week. The orange bar was last Monday. That's when we were together last. Moving average for the 8 was down here. We had just put in a new swing high, right, from this day right here. And then I said that we're not going to pull. I don't want to see us pull back to here. I want to see us stay above this, ultimately get above this previous swing high right here. Okay. Well, we pushed up into this swing high right here. We tapped up again, a little bit higher, again, a little bit higher, again, a little bit higher. And this was on Friday. And today we gapped down. I can't draw this yet as a swing high. I'm going to delete it right after I draw this. I can't identify that as a swing high because this candle is not closed. The far right candle is not closed yet. But right now, that's looking like a swing high where we'll have a new swing low candle in here as well. Okay? So that's what we're looking for. Those higher highs and higher lows. I'm going to take that line back off of there. But what I said was, and I quote, go back and look at last week's Power Hour, go back and look at last week's Power Options Plays video, and you'll see me say the exact same thing. Go back to Mastermind Group. It's in all of it, guys, that I'd love to see us vacillate around here, give the moving average time to catch up, flatten. Gee, look at today. We are flattening. Okay? Pull back and break out. So now what I'd love to see, I love that we had this little breakout on Friday that went above the previous swing high. So we now have a higher high. So it may not be a swing high. It wasn't on Friday because you have to have 3 days. Remember, if you have a high and a higher high, and that last candle, the one on the right, if that's today, that is not a swing high. Swing high requires 1 more day with a lower high. There's no relation to these highs at all. It could look like this. It could be That's a swing. This becomes a swing high, right? Forgetting about these. Let me do it again. I may have made it just too messy. If I had a high, a higher high, and a lower high, this becomes a swing high. Doesn't matter. There's no relation between the third day and the first day. The relation is the high, the higher high, and the lower high. That's the relationship. That's what we're looking for here. Okay? So now we've kind of flattened off. I would love to see another day or two right around that 68.34 level. Just hang there. just sit down, bounce a little bit, get back up above the swing high, come back around, give that 8 moving average a chance to just flatten off a little bit in there. I don't need it right up on that fib line, but give it to the point that if we're right where we are now, and we see where our 8 moving average is right now. Let me zoom on in this a little bit. All right, let me get rid of my crosshair. It's just that line is just showing up on the screen and I don't want it. All right. So you can see where the moving average is right now. You can see where we're sitting right now. If this was our close today and we can get a bounce tomorrow, this might be the only opportunity we get for the move to the upside. And then I'm looking at the next moves up. Ideally, move up. I'd love to see a pullback of some extent. I don't need a big one, but a pullback towards that previous swing high and then a bounce. Right? That is going to be our next target because if today closes where it is now, this will become another swing high. High, higher high, lower high. Okay? But I can't say that until we're closed. We could easily shoot back up today and not qualify any longer as Friday being a swing high. Okay? So I'd love to see us vacillate around here, bounce around a little bit. If tomorrow, if we close where we are, moving average is where it is, we can get a small move up, a retest, and a bounce. Look for it to get above the previous swing high in there, which was this day here. And look for the bounce, moving back up to either the next swing high or ultimately the all-time high, which is up here. If I scrunch that down a little bit, right, that's 69.20 level. And of course, 7,000 is just right around the corner. I mean, right around the corner. We are so close. I mean, at 68.40, we're 160 points away. We move 75 points a day, 155 points in 2 days as a Fibit. We could easily make that ground up in 2 days. This week, we could be at an all-time high. I'm not saying we will. I'm saying we could be. Will the Fed have something to do with that? Yeah. Wednesday's meeting is going to have a big part to play in that decision of what happens. But this is what I'm looking at on the S&P. So right now, my bearish target is going to take us down to 67.81. My bullish target is taking me up to 69.20 with a stopping point, a little hesitation at 68.95, give or take. So 68.95, 69.20. All right, so 25 points higher in there. But overall, I'm very pleased with what the S&P has done. And I know, some will look at this as a chart and they're absolutely freaked out. Oh my God, why would you like this? Look, it's all over the place. It's impossible to trade. No, guys, did we have some moments of craziness? Yes. Somebody tell me, excuse me, moments of craziness. Is that good or bad? Give me a 1 for good. Give me a 2 for bad. When the market gets crazy, is that good or is that bad? Give me a 1 for good, a 2 for bad. There is no wrong answer, guys. Just put in your answer. Don't think. Don't think. Just answer. 1 for good, 2 for bad. Okay. So mostly ones, 1 neutral. Trip said yes. 3 for both. Right? So here's the thing. What does craziness bring? Volatility. What does volatility bring? Premium. Volatility brings bigger moves. Right? Now, you've got to have an understanding of what you're doing. There's no question. I like the volatility. Do I like the whipsaw when we go intraday and we snap to the upside and then we're down again? This candle, we gap up here, we come whipping down. Nah, not fun. Not fun at all. I get it. Were there trades along the way in there that could have been taken? Possible. Depends who you are, your strategy, your system, your entry and exit management rules. All of that become a big part of it. But the potential, yeah. But after, guys, the whipsaw in this only lasts for so long. And then we get 1, 2, 3, 4, 5 strong bullish days that pull us back, not only into a bullish bias, but back into what would be an amazing position right now. We had a high, a lower high, and a lower high here. Right? We had a small pullback and a bounce, took out a new high, so we now have a higher high from here to here, right? Which is critical. Critical. for us. Okay? Critical. So crazy brings credit spreads. There you go, Amelia. There you go. Wendy said one for momentum trades, two for credit spreads. There you go. And that, see, that's just it. Each person's interpretation is going to be based on what they do or don't do. Right? I am, afraid to do this, so two. Right? And that's okay. If you're not comfortable, don't trade it. Don't trade it. But this market has given us excellent opportunities. Have there been good opportunities for swing trades in here? Maybe, but no. All right. This was very tough. If you're swing trading this, very tough. Very difficult to make money on the downside with a swing trade. Very difficult. And then when I say on the downside, with that kind of whipsaw, we're up for 3 days, 4 days, 5 days, and then we're down for two. Then we're sideways for two, and then we're down for four. And then we're up for four, and then we're down for five. And then we're, oh my God, whatever that was. And then, oh, it took off there. I knew that was going to happen. Of course I did. Yeah, sure you did. Just like I did or everybody else did, right? No one knew that was going to happen. You can guess, you can have an opinion, you can have a plan if it does. You don't know what's going to happen. The plan is good, but knowing it's going to happen, and if I were you, I would not say that very loudly. I know what's going to happen here. I got the inside scoop. That's when the SEC showing up at your house. All right, wanting to know where you got the deets from. Tripp said the answer to all questions, it depends, which is why I said both. Jim said SPX daily. Today's low so far was 0.27 below the 0.236 fib line. Absolutely amazing. Yeah. I mean, guys, you see the analysis, how Jim has taken it a step further, how some others answered the question maybe differently than you did. They gave a one, you gave a two, or the ones that said, maybe both, right? It's good for this, for directional trades, it's good for swing trades, or it's good for credit spreads, right? That's what it all comes down to. What does your plan incorporate and allow in the mix? Okay. I like what we're looking at here. Next upside target is going to be this swing high right here. Actually, it's not. It's going to be this swing high here. So Friday's high is where we're looking at next. Okay. Downside, we've got a swing low. I don't know if it's going to give us much hesitation. It might, but then that 67.81 is definitely the one of the biggest concern of where, when I say concern, biggest opportunity to get to is there. Right. This right here is just the old fib. I didn't want to delete it, but this was the bearish fib we had here. So this high matches up here, and the low matches here. Okay. All right. Let's look at VIX, which is fear. Fear's up. We're at 17 right now, 1695 on VIX. Volatility's up a little bit. I don't mind it in this area, guys. If you were those talked about selling strategies and buying strategies. If you're a buyer, you're paying a little bit more for the premium on the options than you did when it was 14, 15, 16. If you're selling and it's at 17 versus 14, you're getting a lot more premium. So if you do both, I like it on the higher end of this yellow level, right? I like it closer to that 14, 17, 18 level. You start getting down into 12 and 10. It's just not enough premium in there. It's very difficult to pull something out there, right? Very, very difficult. But VIX popped up a little bit. I'm not concerned with it. Again, overall, I think that there's room for the S&P to grow, to move to the upside. So I'm confident on that. Now, could stuff come out and mess that up? Yeah, like what? Anything that the president says, anything that happens globally, price of oil being fairly low right now. I mean, I live on Long Island. Queens is a borough in New York, where borough I used to live in. I was there the other day. The place I get gas at here, and that's just because I'm lazy, it's close, is $3.05 a gallon. You go to another gas station in the area, if you pay cash, which I don't, if you pay cash, it's $3.79 for cash. Okay. In Queens, they've got an extra 10 or 15 cents of taxes on gas there than we do on Long Island. So normally you're 10 or 15 cents higher. Well, I go into Queens and the gas was $3.73 maybe. We saw one place at I'm sorry, not three, $2.73. We saw one place at $2.59 in Queens, right? So gas prices coming down, but what happens if gas all of a sudden starts moving back up and it's 3.25, 3.50 a gallon again? People are going to start freaking out. So could that mess up momentum and the markets and so forth? Without a doubt, right? Prices going up and the likes. Okay. So there's a lot of things that could still happen in the market. We are not ready to just take off and be good. I would definitely be cautious and pay attention to whatever is going on in the market, that you're able to analyze the charts and make a decision based on your risk profile. That's really what it comes down to. It doesn't matter that I say it's going up or down. Doesn't matter what Trip says or Amelia says. Well, it matters what Amelia says. It always matters what Amelia says. Okay. But it doesn't matter, guys. You've got to make that decision. What do you see it doing? Because it's your money and it's your trade. And all you can do is stick to your guns. She is the boss, Brenda, without a doubt. She is the boss. All right, let's go back into the presentation. All right, so we got Inner Circle coming up tonight at 8 p.m. On the 18th is the last one of the year for our 2-hour training. Trading You is tonight. I am teaching that, 8 o'clock. Mastermind is tomorrow. And then you got Monster Market Movers on the 22nd. It's the only thing we're teaching the week of Christmas. I am teaching it just because we ran out of days with not having the week of Christmas, and trying not to put a whole lot into the last week of the year either because of New Year's. Power Hour Trading Coaches Playbook are on regular schedule, as is Pop, Covered Call, and E-Mini are on their regular schedules. Right? Mindset Minutes. Kick off the new trading year the right way with quick mindsets, tips from all the WBHQ coaches. So, guys, if you go over to the homepage, Mindset Minutes, click on it. It's going to take you there, guys. It's all trainings that we have done on mindset, right? And Andrew dropped the link in there, so you can pick it up from there as well. But mindset is really what it all comes down to. When someone comes to me and says, "Tell me the best trade. What's the best trade for me to do to make money?" It's nothing to do with the trade. My exact answer is, if you cannot get it right in the 6 inches of gray matter between your two ears, you will never get it right in your wallet. It won't. You got to get it right up here first. The money part is secondary. You got to get comfortable doing this, right? So take advantage of those trainings, right? They're excellent. Weekly training topic: the Fed, unemployment, and all things government related. Right now, the Fed's looking at multiple reports. They're looking at what the cost of goods are to manufacturing. They're looking at what the cost of goods are to individuals. They're looking at unemployment. They're looking at the Fed funds rate. They're looking at all of it, right? They want to see bond rates and so forth, right? And where individuals are. There's a website that you can go to if you haven't already done so, right? FedWatch. So CME Group, it's called FedWatch, right? Shows you 2 days, 1 hour, 15 minutes, 37, 36, 35 seconds, 34 seconds. There's a countdown to the next FOMC meeting. Federal Open Market Committee, FOMC, right? It's the Fed Watch. And it shows us here what's going on. Right now, current, 375 to 400. That's our current rate, okay? There's a 12.4% chance, which you can see right here, that the Fed rate is going to hold steady. There's an 87.6% chance that it's going to drop by a quarter. So the likelihood, the market has already priced in the dropping by a quarter point. It's already in there. You could look at next month. If you scroll up a little bit, you'll see the tabs up here. You can see when the markets are going to be. So you've got a January meeting. There's no February. The next one is March. Okay. So we click on January, and current to stay flat, we're looking at 7.8%. To drop a quarter point, we're looking at 70%. To drop a half a point, we're looking at 21, almost 22%. We have no chance of a half point for this week at all, but there's a 20+% chance for January. Now, does that mean we're going to see that happen, guys? Again, forward-looking statement. What does the Fed say? What does the Fed say on Wednesday about what's happening and going forward? Right? Does Powell concede, give up, call uncle, and say, I'm giving up, whatever Trump wants to do, we'll do? I doubt it. But that's an extreme, right? Does he come back and say, ooh, we're very dovish now. We're not liking this. We may have to cut a half point. Or we're very hawkish. We may have to raise a quarter point, right? Or, it could be somewhere in between of, we're thinking we'll be at a break next month. We're not going to do anything, right? And Wall Street is expecting certain things. Businesses are expecting certain things, right? Investors and so forth. So, and I'm sure many of you are waiting for these lower rates for purchasing of houses and all of that fun stuff, right? It definitely has to be a consideration, right? So when you look at what's going on right now, guys, this is where we go to. I don't really get too far into the weeds here. December is usually as far as I pay attention to because I can't trust what's happening out here. And we're really going to look all the way out here into, July. Okay. So nothing, right? This is the most accurate representation you're going to receive is right here. We talk about it here every week, but guys, so what are you doing? On Wednesday, the biggest thing you've got to keep in mind is this. You're going to see light volume on the Fed announcement day, always, all day long. There'll be trading, but lighter volume. Smaller contracts. You're going to have a little bit of a bigger spread possibly. You could possibly have higher implied volatilities, especially as you start getting near that 2 o'clock time frame. All right, market maker is not taking chances that you get in a trade and just mess them up or her up, mess them up with you got lucky and you took a trade and they get crushed. So you're going to see some bigger spreads, bigger implied volatilities kicking in there. The announcement's going to come out. The market's going to make a move. Usually it's a three-step. Let's say it goes up. It's going to pull back. It's going to bounce, right? Three-step. Then the Fed press conference is going to come out where Powell's going to have a statement. And then from that statement, he is going to take questions. And reporters are not, they're not there to be kind. They are not softball questions normally, especially with him at the end of his term. No one cares as much any longer, but they're not going to be softball questions. They're going to be questions of what do we see with this? What do we see with that? What are you expecting here? We understand that there was dissension this time and three members wanted to cut a half a point. Can you tell us what's going on with that? Right? That's going to be part of it. Are other Fed members coming out and talking about what they wanted to see or want to see happen or expect to happen the next time around? Right? Focus on this one. Get through this meeting. When the announcement comes out, the market's going to do what the market does. And from there, we'll make a decision on how to trade it next. But I am not going to try to extrapolate out 2, 3, 4 meetings in the future and try to figure out what's going to happen along the way and all of the little nuances and try to figure where the market's going to be. It'll be where it be. That's it. I cannot be concerned for that at all. No, I mean, look, Steve. So some of the reporters are. I mean, we're talking about Steve Leisman and major financial people out there, right? That they're just cutthroat. No, and you'll watch. He'll come on CNBC later and goes, "I got an opportunity to ask, and I asked this question." They only get one. And they're not going to get called on again because there's so many reporters there. It's not going to happen. But do some reporters flub their way through? Trying to take a cheap shot just to get a good news story out there. Yeah, I'm sure they do. Right? It's not going to fly very long, and they're getting called out on a regular basis. You see it over and over again. The stories coming out of where things lied and all of that fun stuff. So it's nothing to do with Bright. It's all a matter of how do you put a reporter, how do they put their own spin on something to get the answer they want that justifies their comment, maybe not even what they're making today, maybe a comment they made 3 months ago. And now they're just trying to justify that so they don't look bad. Well, you say, I got to admit it, and then say, I'm right. I was okay with how I said it. So, but no, in that Fed meeting, there are pretty serious comments that are in there. Usually. There are some ding-dongs in there, but usually they are. All right? Okay. Your stocks review. All right, what candidates do you want me to take a look at? Drop them in. This is your opportunity to shine. What does that mean? Guys, this is an opportunity to drop a stock in, let a professional trader look your stock over and say, this is what I see. And if you give me more than just take a look at this stock, I will be happy to analyze it based on what you see. I'm thinking about going long-term buy on this one. I'm doing a credit spread. I want to buy a put. Whatever it is, if you give me that detail, I can potentially add some to it. If not, I'm just going to give you what I see. Jim said FOMC normally every 6 weeks on a Wednesday at 2 p.m. Eastern reports if rates are going to change. Normally 3 weeks after the announcement, the minutes of that meeting are released. I have these dates written on my calendar. There you go. You know, it's funny, Jim. When I used to do printed calendars of certain earnings companies I'd be looking at for earnings, and I would color code, and all the writing was by hand. I'd print out a blank calendar from the internet or make up on Microsoft Word, and I would write certain letters in there. I'd put a big red X for expiration date because there was only one every third Friday of the month. Right now, it's every Friday, sometimes Thursday, but depending on holidays. Um, but I would have all of that type of stuff written on there, all the economic reports, whatever it was. I had a whole color coded calendar that I did all by hand. Right. So you are spot on having it. That's good. All right. So Rick is asking for Cisco. Rick, I wonder why you want Cisco. Rick has an affiliation there. Come on. Okay. Dang, it's been a while since I played with this one. All right, we need a new fib. We've broken the negative 618. We're going to back this puppy up. So here's the thing. You could look at a fib from here to here. Right? It makes the distance between the 50 and the 618 very small, about a buck. Let's undo that. Let's put that back. Let's put this here. Right? Now, or I could look at a fib here. Same thing, 74 to 75. It's another dollar. Kind of difficult. We're going to get rid of both of them. I'm going to draw the fib from this swing low to this swing high. Right? It's not ideal. It's what we have to work with. Right? You're looking at a lower price stock. Okay. So, yeah, but Rob, what about that, yuck in the middle there? Right. So that is called a hiccup. What do I mean by that? We started here, we finished here. You'll notice where we failed. We had this here and here, right? So right about, and you don't know yet, what I mean by that is this. If I take this and go off the screen a little bit with it, right, where we failed and bounced right there, you can't tell where the fib line is going to be unless you were drawing off of there. If we're saying, no, it's just too small, I can't draw off of that. And we get this and this and that. You didn't know where the fib line was. But now, once we put that fib line in place, this hiccup happens about halfway through the overall fib pattern. So all the way back here, it already knew it was halfway through. Go back and do this on charts. Go back and analyze your fibs, which is why in programs like Monster Market Movers, your homework is to draw fibs every day. Go and pick 10 stocks to draw fibs on every single day. Here's the analysis. Here's the technique. Draw them on the Dow 31st. That's 30 stocks. 3 days, you'll have the entire Dow done. Then go do the NASDAQ 100. There's 100. You'll do 10 days. Go do the S&P 500. That'll take you 50 days. Right? You now drew over 600 days of 600 companies of fibs that you've drawn. Right? You've got a pretty good idea and understanding of it. Now, when you go back through and look at the major companies, not some XYZ, .A, .F, .penny stock company, you go back and you analyze them, and you'll start to notice things like this hiccup. And I teach this in the Fibonacci Trading Mastery training, this hiccup pattern there. It's a technique of what we're looking for. I couldn't draw it on the first one. I couldn't draw it on the second one. We'll combine the two together. Is it ideal? No, but it's a way to manage the position. And we know this tends to happen here before we even hit the top. We just know where it tends to go. So right now, Rick, $80 on the upside, 77 on the downside. If it breaks that, we're looking at 83 and change on the upside. All right. So hopefully that helps, Rick. You're quite welcome. Brenda's asking for SPY. All right. Same thing as the S&P 500. We had to redraw the fib. So we had a fib drawn back here. We drew a new one using these lines from here to here. It violated, came all the way back down through the 882. Needed a place to redraw. We revert back to the previous Fibonacci level. So right now, I'm looking at, can we get this pullback to 681, close near it and bounce? If it does, man, oh man, we are sitting with a bullish bias rank of 1 if that's the case, right? And if we get the bounce tomorrow, Katie bar the doors. I am all over it like white on rice, right? I am jumping on that sucker. No ifs, no ands, no buts. Okay? As a trade, not an investment. For me, SPY is very difficult to invest in right now. It's too high from where it came. So it's a little hard. I own a bunch of it now. Brenda said it looks like SPY could retrace to 279. 279. 279, Brenda? I mean, I don't think you meant 279 because I can't even get there. Nah, can't be 279. 679. Okay, there you go. There you go. 6-7. Right? I hate that thing. My wife's a teacher. She gets it all day long. Actually, their kids get in trouble for it now in her school for using it. So 679. Yeah, so that 681 level is where I see it going back down to. Right? And that's where I'd love it to close, right near there and get a bounce tomorrow. That would be the best if we can do that. Right? QQQ. All right. Beautiful. So let's measure this. So we're at $43 here. We're at $48 here. But if I redraw see what happens if I redraw the fib off of this, we've already violated on this. So I've got to keep working off the old fib. It doesn't work for me. Just because it's a bigger move doesn't mean the fib gets drawn. Okay. So right now on Qs, we're at a rank of 3, bullish rank of 3. We're in the middle of nowhere. Right? Give me that pullback to 620 and bounce with the 8 moving average there. 629 is my upside. It's a lot of opportunities. Qs, SPY, 5 days a week, options expiration. If you look right now, and I like SPY better than Qs, but that's just my prejudice. I don't care which one you choose. It's funny, I like trading NASDAQ stocks better, but I like SPY better. So here's the options that expire today. If I go and find a 71 Delta, I could buy an option for $1.43 by $1.45. Delta is 70. All right, we got 3,500 open interest. Wow. And 202,000 volume. Volume. 202,000 contracts traded today. 367,000 traded today. 386,000 traded today. 442 traded today. 50,000. Guys, gals, holy mackerel. Right? Big fan, big fan. So ideally, Brenda, pull back to the 619 half and bounce, or break this the 629.65 retest and bounce. Either way, I'm okay. I would just watch out for these previous highs. I would set my target somewhere down below that all-time high. Right there. And then GLD. I haven't checked it yet today. All right, so it's kind of flattened off. My wife is harassing me that she wants to sell a bunch of gold that we have. And when she had She had sold some back here, ran up to the all-time high, and I told her, don't, and then pull back. She's like, oh my God, we should get out. And it came back up. Oh, we should sell it up. No, just wait, and it's back. Guys, they're talking about being somewhere in that 450 to 500 range at the end of 2026. So it's not like we need the money for the gold that we want to sell. A lot of it is old jewelry and stuff. I'm not selling any of the gold that I have. That stays. Um, but that 403 is the next resistance. 80, 403. We need a 118, a negative 136. We need a 400, negative 136, a 118. We need a 400. All right. So 392 is our resistance. Ironic that that's where we hit the other day, Friday. 392 is resistance, then 400 to the downside, 380. Jim said Adobe looking at the daily candle coming back. Let me bring it up on the screen. All right, so there's the overall picture. Adobe looking at the daily candle coming back to or near the 8 moving average and bouncing up. Low a long time ago was April, November of 20 last now. Bounced off the low Bollinger Band at the low, now working on upper Bollinger Band. Might walk it up for a few days. Problem earnings after market close on Wednesday. Yeah, so right now, we've gotten back into bullish territory, but keep in mind, the one thing that I feel a lot of traders are missing on Adobe is this, that Fibonacci channel. And I don't want to use the word plagued, because that's not what it was, but that has been there for so long, and now we're bouncing right back up again. So use the 346 as resistance, use the 360 as resistance, roll over, use 346 as a target, continue down, 332 as a target. This was a little bit out of the norm, but not unexpected. We had a low, a lower low, and then a lower low, right? So it's there. The signs are there if you stop and look, right? You can find some of these things, but keep your eye, Jim, on that channel. That midpoint where we hit off of Friday and today are, big, right? That 118. So, all right. You're welcome, Jim. Very welcome. Let's see. So with that, everybody, we're done. Great class. Did you guys enjoy it? I had a lot of fun today. I thought this was a good one. This is a good one for the books. Give me a 1 for yes, 2 for no. Show some love in there. Very much appreciated. I went a whole hour with you guys. There's news that the government is ready to what was that? Where'd that go? Oh boy, I don't even know how you did that. Great class. Good. Good. Excellent. Hey, everybody, have a great rest of your day. We're going to leave the room open for a couple minutes. Grab the links that we put out there, Mindset Minutes. Get into Trade with Rob. You can find that on tradewithrob.com, tradinglikeaboss.com. It's all our free resources. But you have a great one, and I will see you all at our next updates. Take care, folks. Bye for now.